Hey everyone, welcome back to the channel. In today's video, I'm going to show you how to use key levels effectively when trading. If you haven't watched our previous video on key levels, make sure to check that out first. So what are key levels? They're price areas where the market has previously reversed direction. These levels are important because they help us decide where we want to take trades. We don't just jump in anywhere. We wait for the price to reach a key level first. If you're learning something new already, go ahead and hit that like button. It really helps out the channel and tells us to make more videos like this. When the price approaches a key level, we look for a shift in momentum, basically a change in the speed or direction of the market. At this point, there are usually two possible outcomes. 1. The price hits the level and reverses, starting a new trend in the opposite direction. 2. The price breaks through the level, comes back to retest it, then continues in the same trend direction. A pro tip: when looking at candlestick patterns, always wait for the candle to close before making a decision. This confirms a move and helps you avoid being faked out. Do you prefer trading breakouts or reversals at key levels? Drop your thoughts below, and we'll work our best to create videos around your interests. In this setup, we saw a long wick candle followed by an inside bar. This shows the market tried to push higher but failed, closing below the key level. That's a sign of bullish momentum fading. You could enter a short trade on the bearish engulfing candle that followed. It's a valid setup, but keep in mind the overall trend was still bullish at this point. So, this could have just been a small pullback before the bullish trend resumes. That's why we prefer taking trades in the direction of the main trend. Don't forget to subscribe and turn on the bell icon so you never miss a setup breakdown like this one. We'll now go through how to find a better entry signal after trend change. On the left, we have the 3-hour chart, and on the right, the 30-minute chart of the same asset. The rejection you see on the 3-hour is the same one here, but the 30-minute gives us more detail inside those candles. After the rejection, price moves sideways, showing a balance between buyers and sellers. Then, we got a pullback that gave us a new resistance level. Once a strong bearish candle closed below it, that confirmed a shift in market structure. Price returned for a retest of this new resistance level. And after the rejection, you can enter short on the 5-minute close below the trend line. Do you find this multi-time frame breakdown detailed enough, helping you see the bigger picture? Let us know by dropping a comment. Also, feel free to share a chart you'd like us to analyze next. After this trade, price sold heavily, breaking below the trend line, and the key support from this 2 reversal points. This pullback presented another chance to enter, as the shrinking candlesticks formed rejecting resistance. You could have entered the close of the bearish candle or waited for a trend line break on a lower time frame. It's the same concept in an uptrend. First, identify a key level. Wait for price to return to that level. Then, watch for a reversal pattern. In this case, we saw shrinking candles forming above a support level, showing rejection. It also lined up perfectly with the upward trend line, making an A+ setup in a strong bullish trend. Entry 1, on the close of the bullish engulfing candle. Entry 2, on the trend line break on a lower time frame. Got a specific trading pair you want us to break down using key levels? Drop your suggestion in the comments, and we might feature it in a future video. Back to the trend line break on a lower time frame. On the left, we have the 8-hour chart, and on the right, the 1-hour. This consolidation represents the shrinking candlestick pattern on the 8-hour time frame. These 3 touch points here give us a trend line. Anything below the trend line suggested a continued downtrend. After reaching and reacting to the key support level, price broke above, indicating the start of a trend change. We then got a pullback retesting the backside of the broken trend line, which also aligned perfectly with the support from this two reversal points. This engulfing close confirmed the uptrend, giving us entry 2. These 3 points right here give us a zone. After this break above, price pulled back and formed an inside bar rejecting the zone. The formation of the bullish engulfing candle indicates the end of the pullback, giving us entry 3. And if you missed it, this low, creating a double bottom, presented another chance to enter. This is the double bottom on the 30 minutes time frame. These 3 reversal points give us a trend line, and after the break above, you take your entry long. One more thing here on the 1 hour, price reversed twice, making this resistance, and once price closed above the level became new support. And after breaking above the level, price pulled back and formed a long wick candle rejecting support. This then made this close a great opportunity to add more positions to the winning trades. A bonus technique. Key levels can also be used to find take profit points. This is USD/JPY on the 2 hour time frame. This trend line highlights a bullish trend going up. Price then broke below the trend line, which was a sign of a possible trend change. This lower low formation confirmed the bearish trend, meaning this pullback presents first entry point to the bearish move. This gives us a key level. This break indicated a continuation of the downtrend, so on this pullback you add more positions. Price goes down, but when it reaches this point, the shrinking candles appeared, hinting at a possible trend change. The fact that this pattern formed within the support level from this low make this a perfect area to consider taking profit. It also lined up perfectly with the third touch of the downward trend line, adding more confluence to the bullish setup, which was confirmed by the trend line break above. A deeper explanation on using trend line for trade entries and exits will be on the upcoming, so make sure to turn on the notification bell to not miss it out. That's the end of this episode. Thanks for watching.